What's up, guys? I hope you're all doing well. So, in this video, as I have promised, we'll go on trade recap that I have taken on the last week, and that were the longs that accounted for somewhere 40 RR, but the highs were at 62 or something like that. So, I didn't really get to my take profit, so I closed it manually, but this is not the case just for now. Okay. As an additional piece of information, I will also cover market structure yet again because a lot of you guys have wrote me and have written me and asked me because since I'm calling this as the most important part of trading, like there is something that is clearly I know that you don't, let's say, right, or that you don't really pay much attention to. Okay, so in this case, I will go on the daily and weekly bias. So, how do we get our bias from the structure? How do we help ourselves with alignment of higher time frames with lower time frames, right? And then, of course, the trade recap. So, this is our plan for the video. And without further ado, let's get to that. And I have always said, and I will say that market structure is king. Okay, the structure is the most important part of trading for a reason. Okay, because when you look at the higher time frame, like monthly or weekly, right, what you can see is that it doesn't really change much, right? So as you can see, we had um, been printing lower highs since 2006, right? So we were bearish. We didn't really switch our trend once because it costs a lot of money, and I mean a lot of money, to break the highs that are protected, okay? Protected or so called strong, okay? So no one, and by no one I mean especially banks and financial institutions, they are not really interested in changing the trend because that will cost them a lot of money and they will not be interested in losing money, right? Or spending too much money, right? Because they can just follow the order flow, right? Follow the structure, follow the creation of the structure, and in this case is bearish, okay? So don't try and change the market direction because you want it, right? It will not happen. Okay, just follow until it fails. And higher time frame structure rarely changes. Okay, which is the reason why we want to be keeping that in mind and you know understanding at what phase the price currently is and how do we align the structure from, let's say, monthly or weekly or daily or 4 hours down to 1 minute time frame, which is our execution time frame. In my case, it is 1 minute and 5 seconds. Like, doesn't really matter. Okay, the time doesn't know price, the price doesn't know time. Market is fractal, which means every single time frame shows one piece of price information from different time perspective, right? And then still it does the same thing all over the time frames. Okay, so this is something that you need to pay attention to. Okay, um, now, uh, I mean, pretty much basic stuff, right? We have um, downtrend or bearish trend. We have bullish trend, right? And then we have the most annoying, boring, some would say hard to trade state of the market. This is a range when we are um, not breaking the lows, not breaking the highs, demands and supplies hold, and like this is the so-called accumulation or distribution of orders before a big expansion to either downside or upside, right? So in all these three states of structure, we always want to have an anticipation or our bias for the day, for the week, for the month, maybe for the next 2 hours or so. Like it depends on what kind of trader you are. If you're a scalper, if you're a day trader, I don't know, maybe you're a swing trader, right? That depends on what style um, you're trading with, right? So let's say we're looking at this specific bearish trend, right? Um, we have broken this point of structure and we have broken this point of structure, which means that, this high, so was this high, are now protected. And we have this supply range, right? This is our supply range that needs to get mitigated. And this supply range, as you can see, got mitigated in here, okay? Now, you might say that that's the whole leg to the upside before the expansion to the downside, right? Well, yeah, that's true. But that's what actually needs to get mitigated. But of course, when we are trading, let's say intraday trading, right, we always want to be looking at something like more specific inside these ranges, like let's say an engulfed order block, right, that has spec liquidity, that has a lit demand, okay. So of course we want to be looking at something like specific, right, but the experience shows that sometimes the price will mitigate something that we are not able to see throughout the time frames before it has actually happened. Okay, so this is something that you need to keep in mind. Okay, and the price currently is in here. Okay, and let's say that today is Monday, right? And I want Monday evening, right? And I want to build my bias for tomorrow, Tuesday, let's say, right? So the bias is going to be that soon we may see a retracement starting, which means that in this case, we will see some short term buys into the premium area or equilibrium or discount, like whatever. But the retracement will start sooner or later, okay? So this is our bias for the day, okay? It doesn't mean that, we should marry this bias and we should be like straight away buying from this point, right? Assuming that it will go from this down to the like this supply higher, okay? No, that will not happen. We would rather wait for price to show it hands, right? And like in myself, it's going to be like 4 hour time frame, right? In my case, it's going to be 4 hour time frame, and I will wait for 15-minute change of character, okay, in around this zone to understand that we are now wanting to change a trend direction, right? That will be the first indication of me and my bias being right, okay? And that means that now we are somewhat in the middle of our time frames aligning, because for our time frame anticipation is that we will be bullish. Now on 15 minutes, we understand that with this change of character, we understand that we are now changing the trend direction, which means that 15 minutes is now turning bullish. Okay, so everything that we have left so far is that we need our execution time frame, which is either 1 minute, 3 minutes, 5 minutes, seconds. They need to align with these two time frames, 15 minutes and 4 hours. Okay, and when they're aligned, we understand that the trade that we're getting into, suppose that all the confluences are in place, right? That trade is more probable. Okay, And since it's a game of probabilities, we want to be taking that trade regardless of the outcome. Okay? So this is our bias for the day. Okay? And when our bias somewhat gets correct, right, we then are waiting for the alignment of the time frames. Okay? But of course, nothing is like that perfect with the reverses, and we may see a further continuation to the downside, right? Because that's still something that may happen, which means this is our next bias for the day or next scenario, because you will never have only one scenario, right? There will be multiple scenarios, 2, 3, 4, maybe sometimes 5 of them, right? So you need to be analyzing the charts the way that it will not be like one-sided, okay? So you will be ready to react to all of them, 5 or 6 of them, right? Okay? And you will not be like blindly buying from the zones that don't actually make sense, or you will not be selling from the supplies that don't really make sense once again, right? So the next scenario is that we will actually keep going, right? Supposedly that there is like nothing like this. So let's say this is the demand. So we don't have a demand to the left. So that means that we have nothing to react to, which means that the price will maybe, that price will maybe hack to this demand. So we need to be ready for that, right? So that means that we now need to get some zones to short from in order to trade into this demand. Okay? Which means that we need to find some supply that looks valid and that will then show the reaction. Okay? And up to that point, what do we have? Well, we have our bias number 2 is that we will actually go lower, so we are bearish. On 15 minutes, we're still bearish because we haven't shown any change of character on 15 minutes range, right? So that means that we now need 1 minute, 3 minutes, or 5 minutes, like depends on what you're executing from, to align with these 2 time frames, which means that we want to see some, I don't know, flip, maybe another break of structure with inducement, and our order block has swept some liquidity, right? So when 1 minute is going to be in place, right? Because on 1 minute we can have bullish structure, right? Because it may retrace a bit on 1 minute, and then that means that we want to be looking for some change of character on 1 minute from bullish to bearish, and then taking the trade once again regardless of the outcome if the confluences are intact. Okay, so yeah, this is how I do this anticipational thing, right? The bias for the day, for the week, for the month, whatever. With the bullish trend, this is just the same. With the range, it is a bit different, but I will not be talking about that in this video, maybe in the next video, because the range, to talk about the range and what it brings to the table and how do we trade the range is actually, time consuming, because there are a lot of things to look at while being in the range, because they're riskier and, a lot of sweeps happen. So we need to be aware of the liquidity, right? So yeah, this will be in the next video, probably, maybe like not in the next video, but in the future, you know what I mean? So yeah, with the bullish example, this is the same thing, right? We have broken this point of structure, so is this point of structure. If we are at this level, right, and this is 4 hour, right, we want to be having at least 2 biases, right? The first one is that we will go to the upside. The second one is that we will retrace back to mitigate the demands within this leg, right? We need to understand that we need to have 15-minute change of character if we want to see the second scenario, and we want to be seeing three time frames aligned in both scenarios. Okay, so if we are looking at scenario number one, we have for our bullish, right? That means that we have 15 minutes up to this moment still bullish. But as I have said, 1 minute changes a lot. So we want to be once again looking at something really good looking on 1 minute. And with that being said, 1 minute should be once again bullish in order for three time frames to be aligned with each other. And then we should be, regardless of the outcome, buying. Okay. If we want to see the scenario number two, which is shorting, as I have said, we want to see the first sign of trend inversion, which is a change of character, right? And then what do? We are waiting for 1 minute to align, because this is going to be 15 minutes, right? But in this, not in this, but in this specific point, right? Specific point, 1 minute is going to be bullish, right? Because we will be making higher highs and higher lows on our way to the supply that has, created this change of character. Okay, which means that we once again want the price to show us that it wants to go to the downside, and that 1 minute bearish sign, right, will ensure us that all the three timeframes are aligned right now, and we can be easily selling, right? And the target is not this low, because it will never get broken. I mean, not never, but it will likely not get broken because it is protected, right? But some unmitigated, let me actually delete all this. But some unmitigated demand, either extreme, maybe some in here, maybe even here, right? We never know which one will actually show the reaction. So we just need to react, okay? So this is pretty much it, okay? It shouldn't be really hard. It shouldn't be really confusing. It should be simplified. And I know, like, I have talked to a lot of people, right? And a lot of people just overcomplicate stuff, especially something as anticipation, because anticipation is really important in a sense of that you need to be aware of all the scenarios, or at least the majority of the scenarios that may happen in the future with the price. But of course, you don't really need to marry them, as I've said. So yeah, this is something that I hope that will help you, right? If not, then just let me know, and then I'm doing something not right in this life. But yeah, overall, now I think we're kind of done with the market structure overview. That took me like 18 minutes, which is not good, but it is not the end of the world. Yeah, so the next is going to be trade recap. So yeah, I have said that I have done some shorts within this lag of price. So starting from here somewhere, and then just, I don't know, to here or to here. So that doesn't matter, but it is covered in the last video. But then I took some longs because I was anticipating the price, to get into the supply area that was marked out here, for one simple fact, because we actually didn't really break the demand that I had. Okay. And as you can see, we have actually showed change of character. That is a really bad drawing. So we have actually showed a change of character on 4 hours within the demand. So that means that buys are now probable. Okay, so that's why I was looking for buys. So then, of course, I was on 15 minutes. And as you can see, I'm now in the trade. And if my trade goes to regardless of where it goes, I will do an analysis of it. But as you can see, was taken off of 15-minute change of character within the supply. But yeah, this is a different story. So yeah, on 15 minutes, what do we have? Well, we had the short that I took, and then the buy that I have missed, and then a further continuation to the downside. And I had this zone that I was once again trying to buy from, but I have never come back to the charts, so I missed it. Okay, but since we had mitigated this demand, right? What did we then show? Well, we have shown an aggression that was our change of character, right? Which was followed by a big continuation or expansion to the upside, right? That has actually broken the structure, okay? So that is why I went and marked this demand out, regardless of it being somewhat tapped in four times. But since it wasn't really mitigated to the 50%, I was like, well, we may as well get the reaction from it once again, right? So it was still left out till the reaction. Okay, if it wasn't reaction up to that point, right, when I was here watching it, then I wouldn't take it, as easy as it is, right? So I had this marked out, and now let's actually replay the price to, I don't know, somewhere here. And let's get to 1 minute. So yeah, I had refined demand within that supply area, and it's really unfortunate that I wasn't really in front of the charts at that time, because there was a clean buy from that area. So as you can see, right, we have change of character on 5 seconds. We have mitigation. We have liquidation of the lows and lows to the left. We have V-shaped recovery. We have change of character. We have flip. So this is our supply that gave the reaction. So I want you to be once again, more aware of the flip, because you may say that this is our supply range, right? But the price just blasted through it, right? It didn't really give the reaction. So we just don't take it. There is no supply in there, meaning that there were no orders resting in that certain zone that needed to get filled. Okay, so we have this actually supply zone that has given the reaction here and here, right? So something like that. Okay, and it was actually broken until this pair of candles in here, right? Then it was mitigated with some structural inducement. So this was a perfect buy for myself, but I missed it. But then what do we have next? Here's how it should be. So we have a mitigation, we have a further break of structure, right? And then what do we have? Well, we retrace back. But then we have once again went to the upside, but then once again retrace back, because we have reacted to the supply that has been created in here, right? But then we have pushed back up, and we have broken the structure, right? So this this demand was taken from 15 seconds, and this was an inducement because we didn't really sweep the liquidity, right? And we need liquidity to sweep. So we have these lows as inducement used, and then you just enter on the uh, top of the order block, and it was 1 pip stop loss. Can I? Yeah, 1 pip stop loss, and then the price just went to the upside and never come back to the entry point. And let's now see how it looks like on 1 minute. Oh, I got this out. Okay, so of course I was trading into this zone at first. Okay, so I took some heavy partials. Let me actually go with that one. 5 minutes. So yeah, I was trading at first to this zone, and then I have taken some heavy partials. I left only 50% of volume after the supply got mitigated, and actually that supply has showed some great reaction, but the final TP, the last one was like this with that supply, okay, but it actually eventually come into this supply, right? But since I for the extreme one, I have actually missed out on like 20 hours. So yeah, which is fine. I'm not actually saying that the trade was bad. I'm happy with what I got. You should never get greedy, right? Because then the market will humble you real fast. Okay, and as you can see, when we come into this supply, sorry, um, I have taken the partials just before it has actually given a strong reaction. And for someone that, maybe is like, what's the word? Thinking that this was a valid sell, right? It was if there is something in the supply and if there are confluences intact on 1 minute time frame, right? But looking from 5 minutes, we didn't really break the demand, as you can see here, right? We have held and we have respected it, which means that this high will now get probably run because it has failed to break the low, right? Which then has happened after the price has ranged. And as you can see, we have given once again a reaction, but then ultimately we have failed. We have then, as you can see, we'll actually go in 15 minutes. So yeah, and then we have actually break that supply, and then yeah, and then it would have hit my TP, but it wasn't there. So yeah, I got taken out. I don't know where. I didn't get taken out. I just manually closed because I was looking at. First of all, it was really late at the night, so I didn't want to leave it overnight, and then I just sold this change of character, and I was like, well, this supply has something in it. Okay, so yeah, but this is the trade. I don't know, textbook, because we have change of character, a great reaction to the upside, newly demand created. We have some inducement above the entry point. We have all the confluences intact. We have a perfect entry with inducement, with flip, with everything, and then a magnificent follow through to the upside. So yeah, everything was, as I have said, textbook. Okay, and this is something that you want to be looking at, because one trade like that a week, and then you don't really need to trade the remaining 4 days, right? But someone doesn't have patience to wait for these setups. Sometimes they just don't happen, which is part of the game. Okay, because these textbook setups will not happen all the time. But when they happen, you need to make sure that you will capitalize on them. Okay, so I think this will do for this video. Not the longest video, thank God, only 30 minutes. And I hope that I will make another video really soon on the short that I have taken and is currently running. Let's actually see how well it is running. It is now running at, it doesn't really change. It is running at 38 pips. Oh no, it is not running at 30. It is running at still 34. Well, okay. So yeah, this will be the end. I hope you have liked this video, and I hope we will get a lot of information from this video. The trade recap on this a short will be in the next video, hopefully. If not, then I have just forgotten about it. So yeah, have a great day, have a great weekend, and have a great trading week before the weekend. So yeah, have a good one, guys.